Before we start, I would want you to hit that red subscribe button to help our channel grow. Also smash the like button. Thanks. Hey guys, what's up? Welcome back to The Impeccable Investor. The pandemic has had disastrous effects on our economy, with the stock market plummeting in a way that was completely unforeseen. It is widely acknowledged that the current state of the stock market is worse than that of the 2008 financial crisis, and that honestly says a lot. However, as many stocks fall, there are many which keep rising up from the ashes like a phoenix emerging from the flames. An important niche to consider is the technology-related stocks, which is indicated by the fact that more than half of the top 10 stocks in the S&P ranking were tech companies, making the investments worth one's while. Confused? Do not worry. We're here to tell you which ones are worth investing in the technological sector. Vertex Pharmaceutical stock. Vertex is a major player in the cystic fibrosis related market, which has survived very well in the current state of the economy, especially during the stock market correction. It is a part of the biotechnology sector, a niche where it is hard to locate stocks that are doing well consistently. However, the Vertex stock has performed amazingly well, with the annual earnings growing by 103%. It has released a new medicine into the market called Trikafta, which earned almost $240 million so far. It is a combination of 3 drugs and has the capability to treat up to 90% of patients who suffer from the disease. Also, they have another drug in the market for the same disease, which has grossed up to $1.4 billion in sales as it increases 80 to 90% every year. Furthermore, the company is expected to grow by 32% in 2021, hence providing ample opportunity to earn some money. Adobe Stock. Adobe is well known for being one of the few companies that jumped to cloud computing aspects in the initial stages. This gave them an edge to their competitors, and it is shown by how they recorded strong earnings and an increase of 33%. Furthermore, their sales also jumped up by 19% in the time of the crisis, thus going up by $30.2 billion. Profit for this year is expected to shoot up by 24% and by 15% in 2021. These elements make it an integral stock to bring into consideration as one considers expanding or initiating their portfolio. Xerox Holding Corp. Xerox is a name often heard inside our homes. The brand is a pioneer in offering digitally influenced print technology and everything related to it. The brand sets itself apart by investing in ventures such as 3D printing, which have allowed it to be one of the most trending stocks in the technology market. In 2019, it rose by almost 55%, giving more returns than any other tech-related companies such as Google or Amazon. This change was brought by the intense planning and multiple cost-cutting strategies and a major reorganization of the management. Also, the company extended a tender offer for the outstanding shares of HP. This attempt at a hostile takeover was terminated due to the coronavirus-related business conditions. Even though this venture did not work out, the new leadership and management show huge promise and large amounts of growth can be predicted. So what are you waiting for? Invest in Xerox XRX stock before time runs out. Facebook. Imagine owning part of a company that literally is part of every person's phone. Self-satisfaction aside, the Facebook stocks are one of the best things if anyone is looking to invest. This is because the prices are moving down due to the decrease in the budgets of the other companies. As companies decrease their investments in digital marketing over the famous social media site, Facebook also loses the revenue they gain through such companies. This in turn leads to a chain reaction and hence driving down the stock price, making it quite cheap to acquire. Another aspect to consider is that even during the slowdown in the economy, Facebook still manages to exhibit a growth of more than 20% in revenues. And why should you acquire this stock, you ask? The stock prices will shoot up for sure once the pandemic ends. As normal activities resume, companies will pour an influx of cash into the website attempting to market their products. This, in turn, will lead to Facebook earning more money and the revenue and earnings rising up, as their shares will not just simply bounce back, they will explode upwards. This will result in massive profits in the long run for investors, and you could be one of them. Act fast and make sure you invest in a stock that will never go out of style. Shopify stocks. As more and more of the world is shifting toward doing everything online, shopping industries have also jumped onto the trend. This means that e-commerce sector has been involved in major growth during the past few years, a spurt which honestly doesn't seem to be stopping anytime soon. Shopify has been one of the companies that have been insanely successful, shown by the fact that its stock rose by a whopping 2,300% from 2016 to 2018. This sort of growth has been unprecedented and unforeseen in the market and exhibits chances of similar growth in the future. As more and more retailers want their websites made, Shopify is one of the platforms they turn to first, as they are renowned for making aesthetic and well-designed websites. The pandemic has slowed down the stocks a little, but do not be fooled. Similar to Facebook, once normal activity resumes, so will their growth, and will simply go higher and higher. This brings us to the end of our video. I hope you enjoyed it. Hit like if you did, and don't forget to subscribe to our channel so that you don't miss out on any of our videos in the future. Also watch the 2 videos that are on your screen because I'm sure you'll love them. With that, I'll see you in the next video.